boy saviib, and here we are with another episode of In Case You Missed It. This is for the week ending May 1st. Alright, let's dive into it. The first story that we see this week was Hawaiian Airlines to offer free high-speed Starlink internet connectivity on the Trans-Pacific fleet. On April 25th, Hawaiian Airlines became the first major airline to announce an agreement with Starlink. This was for the Trans-Pacific fleet. Although the service won't go into effect until sometime next year, there's really no plans on when it's coming out, but they did get a deal together. This is some exciting times. If you hate long, boring flights, they already got the USB chargers on planes now. Why can't they just offer some Wi-Fi? And bam, here's Starlink to offer some Wi-Fi. Hopefully, Hawaiian Airlines is not going to be the only company that offers Starlink. Maybe it's a testing ground, and the big boys just want to see what it does first and how they can integrate it into the system. But this is, in my opinion, a huge win for this week. I like to have options on watching movies in planes and doing whatever I want to do, and having free Starlink Wi-Fi is just killer. Let's move on to the next story. So Elon Musk set to buy Twitter for $44 billion and take it private. Elon Musk's plans to buy all of Twitter for $44 billion was approved by the board. He plans to buy it for $44 billion, or if you want the share price, it's roughly $54.20. This purchase and his plan to take it private should be confirmed or approved sometime later in 2022, maybe the later half. There is still regulatory sign-off pending and shareholder approval, so there's no guarantee that this is going to go through, but we're here, it's close. And Elon has been very, very vocal in what he plans to do with Twitter going forward. What he plans to do is make it a free speech haven. There are problems with it. There are both good and bad things that come from it. But we'll cross that bridge when we get there. That's all we can say. As of now, all that's going on is he's proposed to purchase Twitter. They still need regulatory verification, and the shareholders both need to approve it. So, as it looks so far, yes, he will purchase Twitter, but we don't know for sure if it's going to go through. I do know that there's something like a $1 billion back out fee. So if Twitter backs out, they will have to pay Elon Musk $1 billion. If Elon Musk backs out, Twitter will have to pay him $1 billion. So there's a lot of money at stake in this deal, regardless of which way you swing. But we'll just have to see what happens. But let's go on to the next story. Pending home sales declined in March for the 5th straight month. According to the National Association of Realtors, pending home sales under contract fell at 1.2% for the month prior. This marked the 5th straight month of decline, and we are currently sitting at May 2020 levels. There are some reasons that we can say this is happening. The Fed is taking the punch bowl away, and they are raising interest rates. And high interest rates are not a home buyer's friend. Let's just put it that way, because you end up paying more. Not to mention that inflation is at record levels for 40 years, or 40-year record levels, if you want to phrase it that way. So there are a lot of headwinds in the housing market. We still have a housing shortage, but if you don't have the money and you don't like the terms that the contract is under, who knows what's going to happen? We just have to wait and see. But 5 consecutive months of pending houses under sale, that's huge. That's very huge. Let's get into the next story. All right, so this is the founder of Archegos Capital. He's referred to as Huang. That's his last name. So he was brought up on he's about to catch some criminal charges, if you will, for the collapse of Archegos Capital. And he's not going to catch them for no reason. He's currently facing 11 criminal counts, and if convicted of each count, he will be facing 380 years in prison. Allegedly, he inflated the value of his portfolio, Archegos Capital, from 1.5 billion to 35 billion in 1 year, and brought Archegos Capital market positions, which included borrowed money, so he was leveraged, to $160 billion at the peak. It seemed like he was over leveraged, and he got caught in a margin call, which brought all the dominoes tumbling down. Who knows how this is going to play out, if it was some new risky form of trading or it was just flat out fraud. We'll need more information to see what's going on. But however, there were major associated loss to banks that did finance him. I believe it was to the tune of $10 billion. So we'll just have to see how this plays out. But let's move on to the next story. U.S. GDP fell at 1.4% pace to start the year as pandemic recovery takes a hit. It's been difficult. So U.S. domestic product or U.S. gross domestic product fell 1.4% for the first quarter of 2022. This was below expectations of a 1% gain. This is the worst growth since the pandemic-induced recession of 2020. Some experts are saying that this does not signal the economy is failing or falling into a recession, although the risks are rising. Goldman Sachs sees a 35% of negative growth, and Deutsche Bank is seeing a significant chance of a significant recession in late 2023 and early 2024. The Fed is taking the punch bowl away, so is the government. I believe government spending decreased, and net exports due to the supply chain issues also decreased, which brought down GDP. I believe consumer spending went up slightly, although inflation is high. As of right now, it's really difficult to say what's going to happen. We see some COVID lockdowns in China again. Majority of the world is trying to open up due to the pandemic, and trying to get back to some sense of normalcy. We are in a lot different situation than we were in 2008, 2009. That was a demand side issue. And today we face a supply side issue. We've never had an instance where the global supply chain was as broken as it is today. Normally with the demand side issue, you cut interest rates, you flood the economy with money. People then have an appetite to purchase more things, and the economy comes back. Voila. Well, with the supply chain issues, we can't just throw a whole bunch of money at it and it's instantly going to work. I mean, if we're going to build factories, it takes time for factories to be built and workers to be trained. It's not something that we can fix overnight. I do believe that we will have some tailwinds or headwinds coming very soon. Recession, we don't know. I mean, everybody always says we're 12 to 18 months out of a recession. And if we look at what Deutsche Bank said, that's basically 12 to 18 months out of a recession. And we can continuously say that, but it doesn't necessarily mean that a recession is going to happen. We just need to course correct and take any supply chain issues that we have and move forward. Moving on to the next story. US is not the only one battling inflation. How's that? The broad-based Eurozone inflation at a record 7.5% in April. There's also trouble in the Eurozone. The 7.5% new record high for the Eurozone was set last month, or the month of April, if you will. The European Central Bank is very uncomfortable with a 7.5% inflation record. Although the policymakers are having to battle a lot of things, and this makes it very uncomfortable because they have to battle rapid price growth and they have to battle wage price spiral, meaning that as prices go, that employers are paying people more, so it's like the price and wages are starting to compete against each other, and the higher prices go, the higher wages go, and it's almost just a downward spiral because something has to give eventually, and it's very difficult for a central bank to control that. Most of the increase in the Eurozone came from a surge in energy and food prices. Now, energy prices, for sure, we can see that comes from the Russia-Ukraine conflict, because Russia is a major exporter of oil and natural gas. So the Eurozone is kind of hit hard on that. And then, basically everybody decided that there was going to be an embargo against Russia. Not a classic embargo. They just don't want to purchase their oil due to the conflict. So that made energy prices rise. I do believe Russia is also a major exporter of fertilizer and different grains and foods. I believe that's from Ukraine. Either way, both of those countries significantly benefit the world in a competitive advantage standpoint. So the two of them fighting is no good for anybody. So the policymakers in the Eurozone are afraid that long-term inflation will be higher than their 2% goal. So basically what these policymakers are afraid of is that this inflation is not transitory. If we rewind maybe the end of 2020, the beginning of 2021, everybody was saying inflationary is transitory. Inflationary is transitory. That was a huge buzzword. And here we are with inflation still here, and we're not so sure that it's transitory any longer. So these are some things that we need to combat. And it's not just America, it's the world in general that is battling inflation. I just thought this was interesting because, the Eurozone is currently not only battling with inflation from a war perspective, because of the whole Russia-Ukraine conflict. It's not much that we Americans hear about, and I thought it was interesting that they're also battling inflation. Although, if they want to keep up with us, they're going to have to get those rookie numbers up, if you know what I'm saying. Because here in America, I believe it's 8.5%. Not that it's a great thing at all, but, it is what it is at this point in time. So this was the article I had for today. I want to thank everybody for watching and supporting me. If you have any questions or comments, please leave them in the comment section below. If you want to read more about the articles that I had posted throughout this video, they will be in the description. If you have any ideas or you want me to cover anything, again, leave it in the comment section below. Thank you for watching again. I hope you have a great day and a great week.